Hi, everybody. I'd like to welcome you to this exciting event. I'm glad you could join us. I'm Dove Sachs. I'm the interim director of the Institute at Brown for Environment and Society, which we call IBIS. This is the second of our public events in our series on environment and society. Look, IBIS is an institute at Brown University that's focused on research and teaching with a goal of solving the world's most pressing environmental problems. At IBIS, we've got three world-class strengths. The first is around climate misinformation and climate policy solutions. The second is around climate change, particularly in the melting Arctic with ice disappearing and corresponding sea level rise. And our third area of expertise is really around climate change and conservation of biodiversity. And indeed, the conservation of biological diversity is a pressing challenge for our time, one of the biggest challenges of the century. We need to conserve species and ecosystems, both for their intrinsic value, but also because they provide the life support system on which we all depend. At IBIS, we have a long history of partnering with the Nature Conservancy, which is one of the largest or the largest conservation NGO in the world. And we've partnered with them around a variety of themes, outreach, the high school students, courses, internships, research projects. And in that context, I'm particularly excited that we're able to host Mark Tercek today. Former CEO of the Nature Conservancy. He was there for many years. And I want to thank Brown alum Ricardo Bayonne, who invited Mark and organized this event. And Ricardo is actually an incredibly accomplished professional working at the intersection of environment and finance. He's the perfect host for this event. He's also teaching a course at Brown this year around environment and finance, which is very exciting. So right now I'm going to turn it over to Ricardo. Thank you again for coming.
Thank you, Dove. Appreciate it. So as Dove said, my name is Ricardo Bayonne. I'm a partner and founder of a group called Encourage Capital. We're an impact investment firm headquartered in New York, but I'm based in San Francisco. And what we do is we try to find ways to invest in projects that will help society and the environment while also producing a return on investment, which is why I'm particularly excited about this conversation with Mark Tercek, who kind of blends these two worlds seamlessly, the world of conservation, the world of finance. I'm not going to go into his lengthy resume. I'll just say that he was a partner at Goldman Sachs. Then he went on to become the CEO of the Nature Conservancy. He currently has a blog, which I recommend to everyone, called The Instigator. So look it up. And he wrote a book called Nature's Fortune, How Businesses and Society Can Thrive by Investing in Nature. And really, that's what I would love to focus on, is this blend between investing and nature, and try to get a sense of what Mark learned and saw in straddling these two worlds of Goldman Sachs and the Nature Conservancy. So maybe we could just kick it off with a few questions I'll ask Mark. I'll open it up for questions probably in about 40 or so minutes. And you have to type in your questions through a Q&A button down there. You can type them in now or type them in later. We'll try to get to all of them depending on how many there are, but we'll try and get as many as we possibly can, put it that way. So Mark, thanks for being with us. Really appreciate it. I think my first question is, how does a partner of Goldman Sachs end up running the Nature Conservancy? What was the story there? What was the backstory?
Okay, I'm happy to talk about that. But first, Ricardo and Dove, thank you for the opportunity to speak with you today. I'm happy to be here, and particularly because I really enjoy speaking to university students, because I want to do my best to get them excited about tackling environmental challenges. We have lots of them, but you can think of that as an opportunity. There's important work to be done by today's students. So I'm really happy to be here. So how did I get from Goldman to being the environmental world? There's a couple of parts to the story. part one is my wife, Amy, and I were parents. Neither Amy or I at the time were nature people, really, but we wanted to get our kids, we have 4 children, we wanted to get them exposed to nature. So we started to make trips, first day trips, then weekend trips, then longer trips. And we were kind of geeky about it. So we learned more and more about nature, and I really kind of fell in love with nature, how ecosystems work, et cetera. I think that's important because I believe there's an inner environmentalist in almost everyone. In my case, it wasn't awoken until I was pretty old. But I think that's one thing we have going for us, is we try to get more people on the side of nature. So first, as a banker, I got interested in nature. Second, as a banker, I worked at Goldman Sachs for 24 years. I know Wall Street doesn't always get everything right, but my experience at Goldman Sachs was mostly very positive. And I was a banker. I worked with companies who I thought were led by good, honorable people trying to do the right thing. And so I was a person who thought business could be a force for good. I wasn't naive. I know business isn't always right, but broadly speaking, I think business can be a force for good. So those two interests came together: interest in the environment and how do we solve environmental problems, and business as a potential problem solver. So I came up with this not very well developed idea that I would leave Goldman Sachs and try to go do that. That idea came to the attention of my boss, Hank Paulson. He was the CEO of Goldman Sachs at the time. He knew way more about the environment than me and how things get done. And he said, look, Mark, your idea is not a very good one. He's a very blunt person. I have a better idea. Stay at Goldman Sachs and build an environmental effort for Goldman Sachs. So this was mid-2005, not that long ago. But back then, that was a rather radical idea of Hank's. He didn't have in mind a philanthropic effort. He had in mind we would have an environmental focused business effort because it made business sense, and it would also lead to good outcomes, environmental outcomes. So I agreed to do it. Then Hank left. He went to be Secretary of Treasury for President Bush, but his successor, Lloyd Blankfein, supported my effort. And what we tried to do, I had a small team. We didn't want a lot of overhead. We just worked hard to show every business unit of Goldman Sachs that they could have an environmental strategy that produced good business results and good environmental outcomes. It was really a positive experience. Today, that's kind of common, but then it was new. So I started thinking, boy, I should go do this, at some kind of environmental organization post Goldman. Again, I didn't have that great of an idea. I got a call from a headhunter. The headhunter was not calling to recruit me. Let me be clear. The headhunter was calling because, I was the head of Goldman's environmental efforts. So she said, hey, Mark, you might have some good ideas for a search we're doing. We're doing a search to appoint the new CEO of the Nature Conservancy. And so I said, as a matter of fact, I do have a good idea. I'd like to nominate myself. So you could kind of tell the search firm didn't think that was such a good idea. Most of my friends who knew a lot about the environmental organization almost took pity on me. They said, Mark, poor Mark, they're not going to hire their next CEO from Wall Street. But I did what a good Wall Street person always does. I prepared and diligently pursued the opportunity. And then I was very fortunate. I got the job. So there you have it. That's how I got from Wall Street to TNC. It was, I was very, very fortunate for that all to go my way.
I mean, I think it's fascinating that you were in one of the first kind of like environmental divisions within a big Wall Street firm. And now I can't think of any bank either on Wall Street or anywhere else in the world that doesn't have something like that. So definitely ahead of its time. Let me ask you, what was the first thing or the main thing that surprised you when you got into lead the Nature Conservancy? Anything really that you went, wow, I wasn't expecting this?
Well, I did one thing smart. In the couple of years, I was the Goldman environmental guy for 3 years. I took full advantage of that opportunity to learn everything I could possibly learn about the environmental world, including the NGOs. So I had a pretty good handle on what the NGOs were like. And indeed, it was the reason I was so excited about working at the Nature Conservancy, because the Nature Conservancy would never describe itself this way. But to me, it kind of looked like a Goldman Sachs for nature, a merchant bank for nature. So I anticipated that the fit would be pretty good, and I think it was. So when I joined the Nature Conservancy, what seemed familiar to me was that we had a lot of brilliant people, brilliant, hardworking, entrepreneurial people on the team, working hard to solve problems, usually collaboratively with partners, governments and companies, other NGOs, indigenous communities. So that reminded me of life at Goldman Sachs. But some things were very different, of course, too. As soon as I worked at TNC for a while, I looked back at those Goldman Sachs days and I thought how easy it is to be a business person, where you can, maximize profit and loss, maximize market share, have very clear metrics for how you were doing, reward people with, bonuses and things like that to encourage the right behavior. NGOs don't operate in that world. It's harder to know exactly how you're doing on your various environmental interventions. It's a little bit harder to reward people. So as a leader, you have to work harder to really understand people, understand what makes them tick and motivate them. So managing and working at an NGO ultimately is a lot different than the business world, but there are also similarities. I mean, the last thing I would say is there was a lot, obviously, I didn't know. I was new to the world of conservation, but for those things I didn't know, TNC had lots of experts. They knew those things. I, though, knew some things that the people of TNC knew less about from my years on Wall Street. And we ended up concluding that was a pretty good formula. Have a diverse group of people with diverse experiences. That's the best way to have a team that can address big problems. So, TNC over time morphed and we had a more diverse team. And I think that made us better at our jobs. That also created impetus then to really drive our diversity, equity, and inclusion effort. Of course, we thought it was the right thing to do, but just as importantly, if you're going to tackle big problems, you need diverse points of view, diverse input. You need to listen well. So all of that kind of came together for me at TNC, and the hard lifting was all done by my great team.
Did you get any pushback as a Wall Street banker joining a conservation organization?
I did. I got pushed back every step of the way. All 11 years I was at the Nature Conservancy, and I still work on environmental problem solving with a private market orientation, and I still get pushback. I'd say the pushback is mostly good. So at TNC, I had this motto: our critics are our friends. So generally speaking, when we were criticized, it was usually by hardcore environmentalists. And so we had one thing in common. We both wanted environmental progress. Our critics would have some, misgivings about our strategy. And so we learned, it paid attention to listen carefully to our critics. We might be missing something, or we might get something wrong that they would see. And so I think the pushback is good. So, you don't have to be that creative to come up with a list of concerns or red flags if someone tells you they want to solve environmental problems with a business-oriented approach. And those critics are right. You need to be careful. On the other hand, it goes both ways. So I think we'll make more progress in addressing environmental challenges, but I expect this is true for all societal challenges. We should all try to listen as carefully as we can, especially to people who see things differently, and that will probably lead to better approaches and better outcomes.
Let's dig into a little bit on those better approaches and better outcomes, and the role that your expertise in finance and in banking and on Wall Street brought. Where would you say that expertise brought either efficiency or effectiveness to the conservation space, and how did those two worlds blend?
We did a lot of stuff along these lines, and I definitely owned it. I was the boss, and I was enthusiastic about this. But I want to emphasize, the Nature Conservancy is a great team. So it's not like I don't want it to sound like I was doing all of this. I was supported by an extraordinary team, plus great supporters and partners. One of the original things we championed or pushed hard when I joined was working with companies to change their behavior. We might have been a little bit ahead of our time. Like today, you can pick up any business publication and you'll read and hear about companies doing great things. That wasn't as prevalent, 10 years ago. But we thought if we could persuade business to think harder about their own environmental footprint and how they might address it, or how they might do positive things, it would be good in terms of accelerating and scaling environmental outcomes and conservation outcomes. That's what we were about. We were trying to do big things. And so we thought big companies with big footprints could help us. And we also thought the business leaders would conclude it was in their business interest to do so too. So initially that was viewed with a lot of skepticism. Like we did a project with Dow Chemical and we got quite a bit of pushback. So again, our playbook was to say, look, our critics might be our friends. I remember Andrew Liveris was the CEO of Dow Chemical at the time. We did a press conference at the Detroit Press Club, and we pledged that we would be completely transparent about everything we did. And if people saw us making mistakes or getting things wrong, we'd like to hear about it because it would allow us to do better. But we went on to do pretty good work, and the criticism subsided. And we did projects like that with Rio Tinto, with Alibaba, with JP Morgan, with Syngenta, with Cargill, quite a list of companies. You know, none of it was easy. It doesn't mean everything went right. It doesn't mean that those companies or TNC, everything we did was perfect. But I think those partnerships led to positive outcomes that otherwise wouldn't have happened. And I think they also led to more momentum for this kind of business activity that we see happening across the board.
Tell us a bit about some of those outcomes. Give us an example of how you think those partnerships led to a better outcome for conservation.
Yeah, well, one was with JP Morgan. So I had this notion. I mean, again, I was once the head of corporate finance at Goldman Sachs. So a few years into the job, I said, yeah, I should dig out my little corporate finance notebooks because I don't think we NGOs finance things in the optimal way. Most NGOs pay for things with donations, which are great. I mean, that will always be the most important source of capital for nonprofits. Capital provided by generous donors, whether they're individuals or foundations, sometimes government grants. But you can think of that capital from a corporate finance perspective as equity. And so it's your most precious and your most expensive capital. So what does Corporate Finance 101 teach you? It teaches you to, in a risk prudent way, to lever that capital up so that you have more capital and you lower your overall cost of capital. So with the great help first of some philanthropists, I said, I want to hire some investment bankers for nature. That's how we first expressed it. And I just had this notion that there must be pools of capital out there that could lever up our donor capital so we could do more. And then finally, JP Morgan agreed to support us. We created this unit called NatureVest. It was kind of an in-house, it's still up and running, still doing very good work. It was kind of an in-house investment bank. And the idea was that we would go find providers of capital to do just what I said, lever up our donor capital. And then I had an additional idea, which I still think is a very good idea. If you call this impact capital, some folks don't like this idea. They insist that when you invest for impact, you should also earn very high returns. I have no objection to that. But in this case, the case of TNC, we were the users of the capital. We were paying for that capital. And I argued if we could deliver an environmental return in addition to a financial return, that should entitle us to lower cost financing. So Ricardo, if you were our investor, you would agree to provide capital. I would agree to, we'd have some projections for the future and I would show you an environmental return you would get and a financial return. But I would ask you to make that financial return low because then we'd have a weapon, lower cost capital than the bad guys, and we could go save nature. And we did some really cool deals. We did a deal, we bought some land, really precious, important land in Montana and Washington. It was being sold by a REIT that was a spinoff of a railroad. It was land Abraham Lincoln had given to the Burlington Northern Railroad, the predecessor railroad, long ago. It was so-called checkerboard land, interspersed already protected land. So if it had been developed, the environmental harm would have been great. If it could be saved, the environmental outcome would be really positive, but it was expensive. It was something like $175 or $200 million to do this deal. That's a lot of money to raise philanthropically. We were the only conservation buyer though, so we concluded we had to do it. So the question was how to do that in a smart corporate finance way. So we persuaded one really aligned, great supporter, the Weiss Foundation, to provide us 95% of that capital as senior debt at zero cost. So we won't always get terms that good, but they agreed with the logic. They were big believers of conservation in the West. They were happy to put their capital to work that way. But we were, required to return it on a certain schedule. Then we got another foundation to provide us subordinated capital, 5% of the purchase price at a slightly higher rate. And then 5% of the capital was equity. Of course, we called that donor capital. So we could say to the donors of that capital, the providers, for every $5 you put up, we will lever that up with 95 additional dollars of low cost debt. So that is really attractive leverage to a philanthropist. And then if you step back and think about it, we did an LBO for nature. So it was pretty cool. And we did other stuff like that. We did it with Swiss Re. We did an insurance deal for the coral reef. We did some really exciting things. Now, all of those kinds of interventions still, I think, take a little bit too long to do. This is the way all new financial markets start. They start slow and then they accelerate. And so I'm optimistic that in the period ahead, NGOs like TNC, together with partners in the private sector, will replicate and scale those kinds of interventions. And I think we can be optimistic that will let us get more done. That will let us protect nature at greater scale.
I remember you also issued a conservation note, right? For the Nature Conservancy. Tell us a little bit about that as well.
Yeah, that was the first of these ideas. To me, it was an okay idea. That was my idea. At the time, I remember my team not being convinced I was right, and they might have been right. Yeah, we had the following idea. In lieu of money markets, since a lot of people have cash in money markets and they kind of leave it there, and they don't seem to care too much about the rate of that money market, I said, why don't we ask those people, instead of putting their money with a money market at, I don't know, Fidelity, buy a conservation note from TNC of 1 or 3 or 5 year term. And again, it will have a favorable interest rate for TNC, but you'll know you're getting conservation done. And then I hoped what those providers of capital would do is they would just keep rolling it over, and then at some day, maybe just forgive it, and it would turn into a donation. So that's not a bad idea. That's what kind of got this all going. The only flaw in that thinking was we need, for our projects, most of the providers of that capital chose the 1 year term, just like most money market investors do. And 1 year was too short for us to deploy in a risk adjusted way. So we finally shut that program down, but it was a very positive experience for it because it's what then led to these more ambitious and more thoughtful interventions. Again, you don't get any of this stuff exactly right at first. You got to start and improve.
Just going back to that Montana deal, what would you say were the outcomes for conservation from that deal that you probably wouldn't have been able to do?
The outcomes are brilliant. We did another deal in Montana that preceded it, which is when I first learned about how important this world is. But we bought $500 million of land from the same REIT earlier in Montana. That time, though, we financed it the old-fashioned way with our money, although we were able to sell back much of that land to the feds and some to the state. But in both cases, so the big deal, the $500 million deal, and then that second deal that we financed in the more sophisticated way, in both cases, we were the only conservation buyer. In the first deal, the Trust for Public Land helped us. They were a great partner, but it was our balance sheet. But if we hadn't stepped up with the capital, the land would have been sold mostly to developers. Perhaps there would have been some small conservation buyers, but we couldn't count on it. And then as that land was developed, our ecologists were very confident that that would have spoiled this huge ecosystem, much bigger than the land we bought. And all of the species that were there when Lewis and Clark first explored are still there. So it's hard to imagine a more precious ecosystem. So both of those deals are ones where our grandchildren and great-grandchildren, I think, will thank us. It's extraordinary. They're gorgeous landscapes. The ecosystems are in good shape, and it required all that capital and great work by TNC and local partners and government partners. There are a lot of people involved, but those are outcomes that I think are pretty obviously good ones.
I mean, it's amazing to see more and more conservation organizations kind of use the power of leverage, because business operates with that power of leverage to such a degree, and seeing it put to good use for conservation is incredible. But we had a question come in, and I'm just going to have it jump the queue because it's relevant. And what it says is, what are your views on constructively addressing greenwashing in the financial industry and help progress nature conservation?
It's a super important question. When we first started working with companies, it was even more important because the world was less transparent. Today, there's such transparency that it's hard for any company to think they're going to fool anyone. It would be a bad idea. But what we did at the Nature Conservancy is we just said, look, when we work with these companies whose perhaps their past environmental record wasn't very good, or it's an extractive industry, et cetera, we committed ourselves to complete disclosure, complete transparency. The CEO had to agree to be on the team and to take all my calls and to work closely with me and vice versa. We reserved the right to quit the project if we thought their behavior was bad. And those kinds of guidelines worked pretty well for us. But to be sure, we have to worry about greenwashing. Again, it's harder to do in today's world because there's so much more transparency. But now we have new opportunities and challenges. So today we see companies make these kind of grand commitments to achieving net zero in terms of their own carbon footprint. And I think this is very positive. But if you're a geek like me and you read these pledges carefully, there's a lot of vagueness. There's not great clarity in exactly what they're committing to do by when. And so I think environmentalists have to, and the government, I think, have to put pressure for disclosure to improve there, because it could be a kind of greenwashing again. It's pretty encouraging. So under the Biden administration and the new team at the SEC, by the way, the new SEC commissioner is one of my former partners at Goldman Sachs, Gary Gensler. It's interesting. He is a tough, I think he's going to be a very tough SEC commissioner, and they've already said that they're going to ramp up tougher disclosure rules in connection with ESG and climate commitments like this. And that, I think, will allow for more progress. It will allow investors to be smarter about who's doing what, or customers who want to do business with good companies, and it will make it less likely anyone can get away with greenwashing. So disclosure, I think disclosure is going to be a very big deal in the days ahead. Now, it's not easy. We have to be a little bit patient. We see the TCFD, we see SASB.
I'm going to stop you. I'm going to stop you there, Mark, just because you have a ton of acronyms there that you've thrown at us. So ESG, that's environment, social, and governance, and that's including those factors in financial and business decisions. SASB is the Sustainability Accounting Standards Board. The TCFD is the Task Force on Climate-Related Financial Disclosures, which was set up and run by various luminaries, including Michael Bloomberg, to try and come up with what are the data that companies and others should disclose on climate in finance. Sorry, continue.
No, thank you, Ricardo. Sorry for the buzzwords. Yeah, well, I think this is an interesting thing for students to think about. So you might think at first glance, well, this is just accounting and it's probably easy. You can just the regulators can command companies to disclose these things. But as you dig in, it's pretty complicated. And so among the many opportunities that lie ahead for people to figure out is, okay, what will be the standards for disclosure that are workable, are practical, aren't exorbitantly expensive to do, and will provide the clarity and the comparability that investors and employers and regulators seek, so that we can be smart about judging and determining who's doing what. Really, most of the environmental challenges we face provide those sorts of challenges, or we can think of them as opportunities.
Yeah, I think what's interesting to me, though, is I've spent my entire career looking at how do you internalize externalities into the economic system. And by that, I mean that our prices are wrong, right? We don't take into account the value of ecosystem services or social values or other such values. And what's interesting about this push for disclosure, this push for environment, social governance factors being incorporated into financial decision making, is that it is, in a way, a way to at least bring disclosure about some of those externalities into the financial game. And one thing I'd say is that I have never in my 30, 40 years of working on this seen as much movement on ESG and disclosure as I've seen in the last 2 to 5 years. You mentioned the task force on climate related financial disclosure. There's a task force on nature related financial disclosure. There's a ton of work being done on climate and how do you incorporate that. And we've just seen, like in the past 2 months, the issuance of regulations from the European Union that are really, really strict on financial disclosure around ESG. And I think these regulations are going to affect not just companies in Europe, but they're going to affect anybody who wants to raise money in Europe or who wants to sell financial services in Europe. And you mentioned the SEC. We've seen them take on, new, basically saying they're going to look at disclosure on climate. They're going to require, disclosure on ESG factors. So I think we're moving into a world where these government bodies like the SEC are requiring that kind of disclosure, which is interesting, right?
It's really interesting and I think encouraging, you're right. It wasn't long ago that we environmentalists, when thinking about climate change, we used to just keep pounding the table. We need a price on carbon. We need a high price on carbon, and we need it to rise over time. But it turns out we haven't had much success with those kinds of regulations because at least right now, the electorate doesn't seem to be willing to do that. Doesn't seem politically viable. So that was a setback. But instead, what we're seeing is investors, employees, customers are pressing leading companies to do this kind of, make these changes themselves. So if you just Google net zero, companies making net zero pledges, it's a who's who of companies. Obviously the big tech companies. So Microsoft, Google, Amazon now, Walmart, Target, you name it. Companies are kind of getting ahead of the regulators. It's a kind of self-regulation, and they're getting on with the task of getting their carbon emissions to zero. Now, we need better disclosure. We need to accelerate these efforts. But what I think will happen is that as those programs make progress, that will be progress on the climate front. And then those companies in turn will, I think, turn to legislators and say, hey, it's not fair if just we good guys do it. We need regulations to make the laggards do the same. And so we might be inadvertently finding a new way to get the regulations we need. We can't really wait for the perfect regulations we need. So we've encouraged and pushed companies to do more, and it's encouraging. They are doing more. Now, it's also really important to add, not all companies are. There are laggards. There are also companies, I think, who are exaggerating what they're doing. And so that's all immediate, room for improvement.
Yeah, and it's heartening to see the financial world enter the fray, right? Not only creating at Goldman Sachs a sustainability division that kind of took your work forward, but many other of the big financial players heard that one of the biggest insurers in Japan has said that all of the assets it manages, it's going to invest using ESG criteria. We'll yet to see what that means, but it's still incredibly encouraging. And, the biggest investor in the world, BlackRock and Larry Fink, have said they're going to start asking their companies what they're doing on climate, and they're going to start, not investing in those that aren't, getting prepared for dealing with these climate risks. I mean, how serious do you think all of these are, like the Larry?
I think it's a big deal. I'm probably a little biased. I'm a finance guy by background, but I was puzzled why it took so long for the financial world to get where it is. I thought when Hank and I started this in 2005, we were right, and it would kind of sweep the finance industry. But then we had the financial crisis, and I don't know, one thing or another got in the way. But the financial world now has figured it out. So you're right to mention Larry Fink at BlackRock. Every year he puts out a letter to the CEOs of all the companies that BlackRock invests in. BlackRock is the biggest money manager in the world. So they basically are one of the biggest owners of every public company in the world. So every CEO gets a letter from Larry every year. And this year it said, you better have a plan to become net zero or watch out, because you can, the dollars are going to flow to companies with those plans and flow away from the companies without them. It's a big deal. Another company that comes to mind is AXA, the French headquartered global insurer. I think insurance companies are really interesting, but it shows the power of finance. I mean, they're risk managers. They own the risk. If all hell breaks loose, it's their problem. So you can expect, and you'd be right, they're analyzing all these issues carefully, not just environmental ones. They're also paying attention to health risks, obvious ones like smoking, or maybe not as obvious like soda, or even less obvious, but probably really important going forward, the health impacts of loneliness. And then AXA organizes both its investing activities and its insurance activities around those risks. I mentioned Swiss Re was our partner in this Mexican coral reef deal we did, insurance for a coral reef. So what I like about the finance industry is it's not an ideological industry. You crunch the numbers, you discount them back to the present. That's what net present value is all about. And you act on that. And so what I think we're going to see is the finance sector pays more attention, say, to net zero. In my view, one of the problems with these net zero commitments is they're all back end loaded. But I think if you do a financial analysis, you say, well, that doesn't make any damn sense. We should accelerate the emission reduction to now. Sooner is more valuable. And once finance gets into this and it builds momentum, and the way it builds momentum is investors ask for it, therefore they pressure companies to do it. As companies to do it, results improve. Once that virtuous cycle, I think it's virtuous, gets turning, I don't believe there's any turning back. So there's a lot to worry about going forward, but I think this is one area where I think we can be pretty positive.
And you think it'll last? You don't think it's greenwashing?
No, there's not much room for greenwashing on that. I mean, today, because we noted disclosure is poor, and there's yet not agreement on how disclosure should happen. So right this minute, it's hard to know with certitude who's doing what. That's very frustrating to everyone. That's why all these financial firms we're talking about are driving these programs to get to an agreed upon set of metrics for better disclosure. But no, I don't think once this genie's out of the bottle, I don't really see how you can turn it back. Another thing going for us, now this is a sad thing, but when we think of the catastrophes that we're experiencing from climate change, that's driving a lot of this action. You mentioned earlier biodiversity. Biodiversity is a little bit tougher because the consequences of diminishing biodiversity aren't as obvious as the consequences of rampaging climate change. But the business community, the environmental community are working hard there. You mentioned my newsletter. I just wrote about this. There's a campaign that's now being launched, 30 by 30. And it's a program whereby most of the world's leading countries, together with world leading companies, are coming together with the environmental community to protect 30% of habitat, marine and land, by 2030. This is a big lift. It won't be easy, but the idea is not just to protect nature for nature's sake, but also to protect, as you noted earlier, Ricardo, those vital services, or Dove mentioned this, those vital services like clean air and healthy food and water, good soil, all these things we depend on that nature provides us.
Yeah, I'm going to jump to a question that was sent in. Are you optimistic or pessimistic about our ability to meet the 2030 climate goals, and why? Will it make a difference if we do?
Oh, it will make a difference if we reach the goals, but I'll come back to that. But am I optimistic or pessimistic? I'm optimistic in the following way. If we do the right thing, the royal we, if humankind does the right thing, starting now, we can achieve the goals of the Paris COP climate accord, and we can achieve the goals of programs like 30 by 30, protecting 30% of the world. But it is 100% a function of what we do, and we have very little time to procrastinate. So I don't think it's right to say, are we optimistic or are we pessimistic? We can be encouraged that it is within, I think, our ability, humankind's ability, to do the right thing here. So then the question is, will we step up and do it or not?
Okay. Another question that came in, would you recommend students go into finance and try to lateral into environmental space later in their careers, or try to get into sustainability focused job right off the bat? And I think there's a related question that says, how should finance professionals who want to make an impact on climate action think about the trade-off between working for large influential organizations like Goldman, BlackRock, Swiss Re, where it may be harder to push for organization-wide ESG disclosure, versus smaller, more agile, targeted impact investment firms, family offices that are stricter in their environmental goals, but have much lower AUM and therefore less ability to make a dent in the big
Okay,
picture?
those are all good questions. I heard a couple of questions. The first thing I want to say is I don't think it matters too much where you go to work. It matters more, how you do your job and what you do. So you could go work for an NGO and be directly in the protecting the environment business, but I would still then want to urge you to, do your work as best as you can. Don't lose sight of the goals that originally motivated your decision to do that, et cetera. I mean, you could work in an environmental organization, I suppose, and not be that good of an environmental citizen. So of course, don't do that. But alternatively, if you go work for Goldman Sachs, like I did after grad school, or you go into government, or you become a teacher, I don't care what you do. Almost every organization that you'll be affiliated with, whether it's your employer, or today it's your university, or it's your church, you can speak up and encourage your organization to prioritize these societal matters, not just environmental ones, but all of these societal matters you care about. And what's, I think, cool about today is leaders listen to everybody. It's a flatter world than it used to be. I know firsthand CEOs care about what their newest people on the team think about these matters. And a lot of the companies who are doing good things right now, their principal motive is they know that if they want to recruit and keep great people, they've got to have corporate values that match the values of their people. So first thing I would say is, no matter what you do, no matter where you work, you can encourage your organization to do more. If you work at an NGO, you can encourage your NGO to be net zero, just like NGOs encourage companies to be net zero, and so on. If you think back to the Paris Climate Accord, one of the principal people there who made that all come together, we had President Xi in China, we had President Obama, and we had the Pope. The Pope really went beyond the call of duty and had an encyclical about protecting, the natural world. And he did it in religious, but also pragmatic tones. But, religious institutions can make a big difference too. So wherever you go, push your organization to do the right thing. And then the other thing I would say is more like how you comport yourself. And I'm thinking about myself too, because I get this wrong as often as I get it right. But like when I first joined the Nature Conservancy, I remember, it was kind of intimidating. There was a lot I didn't know. And so I really erred on the side of reaching out to people and listening to them, especially people who saw things differently than me. And I really tried hard not to make the mistake of thinking I knew what was right, because I didn't know. So it was easy to do that. And I think, therefore, I got off to a very good start as the leader of the Nature Conservancy. Over time, I sometimes lost track of that. I got very busy, of course. I developed more confidence in my point of view. We had a strategy, and I wanted to champion that strategy, but sometimes I lost sight of that. So try not to make that mistake. Wherever you work, and no matter what your point of view is, don't be so sure you're right. There's a new book by Adam Grant. I forget what it's called, but it's brand new. He has this little diagram in it, which is really interesting. It's a hierarchy of like the better ways of thinking. These are my words, not his. But at the bottom, he has a category called cult leader. And the cult leader's motto is, I'm always right. And then at the top, I think he calls the top category scientist. And the scientist says, I might be wrong. And Adam Grant argues that I might be wrong is the better framework. And I think we all need to keep that in mind. So that might be some advice you didn't ask for, Ricardo, but there you have it.
Yeah, no, I mean, I think one thing I would add to that is that no matter which way you go, you should understand the power that finance brings. Because, when we started our company, there really wasn't people that straddled that finance and environment side. We had to hire people from finance and people from environment. I think schools now are bridging that divide and are producing people who have both skills and expertise. So I would say if you're into an environmental organization, learn about finance. If you're in
Yeah, I buy that.
a financial organization, learn about the environment. But you bring up
Oh,
a good question
well,
about,
you know, but Ricardo, can I say one thing about that?
yeah.
I remember, well, I would say, you know, the world though, environmental progress depends on a variety of skill sets. So there's room for specialists. So if you're a geologist or a biologist or an environmental scientist, that's great. But if you're an English major with a knack for really superb communication, the environmental world needs that too. And then Ricardo is right. We need both specialists and technical people, but then we need generalists who can bring the different worlds together. I was more of the latter. So there's room for all types or all strategies. Sorry, I interrupted, Ricardo.
Yeah, no, I agree. And, you know, there's people who say there's several different types of leverage you can have. There's financial leverage, there's leverage through communications, there's leverage through code, and there's leverage through people, right? So, you know, you can achieve great goals in almost any area if you use those different forms of leverage, right? So understanding that, I think, is important. But you brought up an interesting question of, I might be wrong. Is there anything you regret from your time at TNC that you would have done differently or better? Or?
It's a good question. You know, on the one hand, I'm super proud of everything we accomplished while I was at TNC. Now, again, the credit goes to an amazing team. And that amazing team is still driving the Nature Conservancy. There's a superb new CEO, my successor, and you know, support TNC and support other NGOs. They're really great organizations. When I look back at my time, I mean, it really builds on what I was just talking about. I think I was at my best when I was most open to opposing points of view. That's when I think under my leadership, we got the most done. And I think I was less effective when I was too busy for that or less open. Like one example would be in the area of diversity, equity, and inclusion. So an enormously important priority for environmental organizations, for TNC, I'm sure for Brown, for all organizations today. And in my early days at TNC, again, I was listening so carefully. It was super clear to me that TNC had a lot of room for improvement. I mean, it was kind of obvious, I suppose, but even in areas that might not be obvious, like a majority of the people on the team when I joined were women, but women felt like they weren't necessarily being given the same kinds of opportunities. So we built a DIE effort. By NGO standards, we put a lot of resources into it. We hired a great full-time professional team. We built training programs that everyone had to take. We introduced new recruiting protocols. So we had to have diverse candidates for jobs and diverse interviewing committees to evaluate candidates. We launched an annual survey, a rigorous one, run for us by an outside firm so that we could judge how we were doing on these matters, not only in aggregate, but also unit by unit, geography by geography. So we did a lot of really good things and we had reason to be encouraged. The results looked pretty good. But then late in my time, it became evident, and it was really disappointing that although we had made progress, we could have made more progress. We had people on the team who weren't happy. I felt very badly about that. And when I look back and think, well, what could I have done differently? One thing I think I could have done, and I would do today in a position like that, is try to listen harder, and in particular, make it easier for people with a dissenting point of view to share those views with me so I could hear it firsthand, or my team. And I think the other stuff we got wrong is usually a variation of that, usually listening. I remember once, you know, the Nature Conservancy in the US is really interesting. It's organized by state. So we had 50 state chapters, just like Capitol Hill has 50 sets of senators and congresspeople. And so that made it possible for us to be a uniquely powerful force on Capitol Hill. And we were nonpartisan. We had friends on both sides of the aisle. But shortly after President Trump was elected, I didn't do this on purpose, but in some public commentary, it came across that I was disagreeing with President Trump, okay, fair enough. I had reason to disagree, but I came across as a partisan, and I upset some of our red state supporters, and they felt like I wasn't listening to them enough and paying attention enough. And that was another mistake, the same kind of mistake. So that would be my big takeaway. So I think CEOs have to really listen, but I think we all do, no matter what our line of work, no matter, and so that'd be also a thought for the students in the audience today.
So I don't know how much time you're willing to give us, Mark, but there's 11 questions that we haven't answered. So I'm going to start running through them. And
we can go on a little bit, but for those, if anybody's worn out, don't feel obliged to stick around, but we can stay on the call longer, Ricardo, and try to get to everybody's questions.
So the first one is, beyond ROI, how should investors integrate ROCR, return on carbon reduction, into their investment analysis? Can you share your thoughts on factors to consider in calculating ROCR?
Yeah, it's a really good question. And I think it's evolving. What I argue, I actually started a little bit higher level when in my role today as an advisor to CEOs, I just say, I mean, it reminds me really of what Hank's ideas were back in 2005. I say, listen, how might a climate-oriented program or some other environmental program that benefit the business? Well, let's start with the top line. To me, it's almost inevitable for most companies. If you go after addressing climate challenges, you're going to find new ways to grow your top line, which is generally the most important and most difficult thing to do for a business. It'd be hard for you, I think, to come up with a company who can't find opportunities like that. Or next on your income statement, lowering costs. I mean, most companies have already discovered this. As you focus on reducing emissions, you just become more effective and more efficient, and costs go down. Or if you think about long-term capital spending, there are a lot of companies today, and this is famous in the literature, who are very now worried about so-called stranded assets. A few years back, they weren't paying close attention to these matters. They made long-term investments in assets that aren't aligned with a lower carbon footprint. And now they're stuck with those assets, and they'll probably need to be written down or are being written down. Or you can think about, how do you motivate and inspire your team? Probably by being a leader, not a laggard on these kinds of issues. So you can kind of start at a slightly higher level, I think, and go income statement item by income statement or risk by risk. And I think develop a point of view that, yes, this makes sense. And then as you realize those sorts of opportunities, they do indeed translate to a higher return on resulting from carbon reduction.
Yeah, no, I think it's also interesting. We talked a little bit about, the carbon markets and the interest in carbon. I think we are seeing a resurgence in carbon markets, and there's a new task force headed by Mark Carney, who used to run the Bank of England and the Bank of Canada, about what do we do with this voluntary carbon market and the sort of net zero commitments that you're talking about. So I think we're going to see a lot more people paying attention to emissions, how they offset them, and hopefully they'll follow that mitigation hierarchy of first avoid, then reduce, and only what you can't avoid or reduce, then offset. But somebody needs to hold their.
I'm glad you mentioned that, Ricardo, and I'll just kind of quickly note for the audience again, pay attention to the topic of carbon removal. So the IPCC, this vaunted, huge task force of the world's best scientists, say we need to be at net zero by 2050. They pick those words carefully. That means anthropogenic, human-caused carbon emissions need to be balanced by anthropogenic removals. And we haven't really yet figured out the very best way to make those removals happen. I think this is one of the biggest opportunities, new opportunities to ever arise. It's a little controversial. We have a lot to work out. But if you're a young person wondering, hey, where might there be some interesting work for me to do, whether as a finance person or as a scientist or as an academic or as a regulator, this field will be wide open.
Yeah, there is a question of your role and perspective on the Carney task force.
I'm now involved, so I suppose I'm biased. I think the Carney task force is really important. It's really controversial stuff. nobody has figured out how to get all this stuff right. So if you Google the Carney Task Force, you'll see there's lots of discussion and debate about how to get this right. I think you should regard that the way I suggested earlier. All criticism is good, all debate is good. We have a lot to figure out. But Mark Carney, I shouldn't speak for him, but I think the task force kind of sees it like this. If I'm right about carbon removal, what I just said, and if we want companies to get into this space, and we agree that it's a little controversial or unclear how this will work best, then we need clarity, we need rules, and we'll also benefit if this can become a tradable commodity. That will drive to lower costs. And lower costs are really important here, because if the costs aren't as low as possible, low-income people are going to be disadvantaged. This won't be a just transition. So those are the end goals. But again, there's a lot of work ahead and a lot of debate and discussion that will be undertaken to get to the finish line.
Right. It's interesting what you said about carbon removal, because not too long ago, Bill Gates was talking about, his new book on climate and carbon, and he was saying that he is offsetting all of his emissions using, mechanical carbon air capture and sequestration, and he's paying $700 a ton. So he's spending just for himself $7 million to offset his emissions because he wants to support the technology and because he wants it to go forward. I find it interesting that we sometimes don't pay attention to the powerful role that nature can play in doing this, because it is the original carbon capture and sequestration technology, and we need more on biological carbon capture and sequestration.
Yeah, I'm going to plug my newsletter now, Ricardo. Please subscribe to my newsletter, The Instigator. It's free. It's on Substack. But this past Sunday, I wrote a short note on the Gates book. I think the Gates book is great. I really encourage people to read it. It's super clear. And I think he's really smart to emphasize the need to make climate progress at low cost. I think that's important. But then I say, I think he's wrong about nature. He dismisses nature-based carbon removal. And it seems puzzling to me, because he says, on the one hand, in technology, what he's doing is too expensive. He knows that, but he expects there to be a lot of innovation in technology. I think we can say I think we can expect the same kind of innovation in nature-based removal. And it's another area of great promise, and we have lots of work to do.
Yeah. So Mark, I'm going to stay around as long as I possibly can. So you're going to have to stop me, but I'm going to keep reading.
Keep going.
Do you think blockchain technology can address any questions about disclosure?
I'm not an expert, so I'll just be brief. I do know that in topics like nature-based removal, et cetera, there's a need to be sure every step of the chain, or in supply chain management, there's a need to have greater amounts of confidence or certainty into what's happening where. And smart people tell me blockchain can be a tool that really powers that, but it's not my area of expertise.
Yeah, I'd just say that we are seeing the emergence of carbon coins and blockchain related carbon coins. So they exist and they're out there, and people are looking at how the worlds of crypto and carbon collide. But that's a whole nother discussion in and of itself. All right, could you expand even more on your view of the future of ESG reporting? The vast number of frameworks the company can comply with makes the space quite noisy and messy, but there are still many startups working on ESG reporting. How are we going to set one path for ESG reporting?
Yeah, I think I'm very optimistic about ESG. I agree. It's a bit messy today. But remember, it's pretty new. It's moving quickly. So no one's sitting on their hands. But if you study the history of financial accounting, I'll admit it's maybe not the most exciting history in the world. It took a long time for us to arrive at generally agreed upon principles for accounting. And now we need to do that in the area of ESG. So yeah, there are some weird outcomes today. There are these different, entrepreneurial outfits trying to seize this business opportunity. And you see funny things, like one ESG ranking system will have company A at the top of their list. The next one will have that same company at a lower position. So we have work to do. I'm pretty optimistic that that will be sorted out. Investors will gravitate toward the methodologies that work best for them, And I think we'll find a good outcome soon. But I would say, in addition to that, ESG is mostly compliance. It's important. It's ensuring that companies can check the box in these different categories of performance. I personally am more interested in like ESG plus. I'm not sure what to call it, but of course, the company that I'm enthusiastic about, I want it to be compliant with the most demanding ESG scorecard. But in addition, I want that company to think very hard about what it can do above and beyond that, beyond the call of duty, where they can make an outsized difference. And I can point to a lot of examples. Like one I'll point to now is Walmart. I know not everybody's a fan of Walmart, but on the environmental front, I really find them impressive. Walmart is famous for two things. I mean, more things, I'm sure, but I'll note two. One, running their supply chain efficiently, and two, being very tough on their suppliers. For a lot of the Western world's leading consumer goods companies, Walmart is something like a third of their sales. So that gives Walmart tremendous clout. And Walmart has famously used that clout to insist on very low prices so that they can sell things at low cost to their customers. That's what's made them successful. Well, now today, Walmart has a thing called Project Gigaton. They pledged to take out of their supply chain a gigaton of greenhouse gas emissions. That's a lot. They admit they don't know exactly how they're going to do it, but the framework is they're requiring their suppliers basically to do it. I know all about this because when I was at TNC, Walmart's CEO, who's a great one, would summon his CEO suppliers down, and he would summon a few NGO CEOs. So I would go too, and we'd sit around in the room and roll up our sleeves and think hard about how do you reduce a gigaton of greenhouse gases out of their supply chain. But the reason I tell you that story is it's appealing to me because it seems to me exactly what Walmart should do. So other companies, once they're ESG compliant, I think they need to think hard about it. Is okay, what are our strengths? What are our points of connection with the world? Where can we make an outsized difference like that? That's the kind of corporate behavior that I am in favor of.
Right. All right. Some argue from the financial perspective that being green results in better returns. There is reasonably strong evidence that supports that view in commercial real estate, but how valid do you think that theory is across a broader business perspective, and why?
Well, we probably don't have the full answer yet. If you looked just over the recent period, you would see that these ESG funds have performed extraordinarily well. So right this minute, ESG themed or environmental themed investing is very popular. And so the returns have been very good. It doesn't mean that will always be the case. That earlier question, return on, how did you put it, Ricardo? Return on carbon reduction. I shared my views and why I think over time, companies will be financially rewarded for doing the right thing. But there's another side of this. If you have companies agreeing to doing a lot of carbon emission reduction and carbon removal today, that will raise expenses, certainly in the near term. And competitors who don't do that will have then a cost advantage. And so we've got to be eyes wide open about that. So what do we do? Like the airline industry is struggling with this right now. It's interesting. Most leading airlines get it. They're saying we've got to do something about our carbon footprint, and they don't have that many options today about how they operate aircraft. And so what the leaders want to do is band together so that all airlines agree to buy offsets or to buy carbon removal. And if they all do it together, costs will rise equally for all of them. And so no one airline will be disadvantaged. But it might not be that easy for them to hold that compact together. And so these things are complex. I'm glad you asked the question, and I don't want to suggest that any of this is easy. And it's one reason why the leading companies who move first deserve our support, because they're doing something that is usually pretty hard, and we want to encourage and reward them for that.
All right, I'm going to put two together. What criteria would you consider when considering being an advisor to a climate startup? And there's another one related to startups. We founded a revenue-generating climate nonprofit and resonate 100% with your insights, refinance and conservation. But how can startups get access to climate impact funding? So 2 startup
Well,
questions.
so I said I'm an advisor to private sector players today. I'm working with a bunch of startups, so it's really fun, and it's a very exciting time to be a climate addressing startup because dollars are flowing to such startups. My suspicion, though, is it won't always be like this. And so, again, I'm not a startup expert. I'm sure there are startup experts in the audience. But even I'm wondering, like, how do you know which of these startups are going to succeed and which ones won't? We know that most won't make it. I love them all because of what I find I think their strategies are so noble. But again, I'm not an expert. The startup world is tough, but there are a lot of experts out there. So get smart on what makes a startup succeed. An NGO startup, I think there is room for NGO startups. I think the NGO world will change a lot. There's been so much progress these past few years by the private sector, all these new initiatives we're talking about. And I haven't seen a growth in NGO capacity that matches that. And so query, is there an opportunity for new types of NGOs to step up and do things? I suspect there is. So if you're entrepreneurially minded, but are inclined to be an NGO person, my guess is there are exciting opportunities right now.
I do think there's a risk that some of the traditional NGOs will be superseded by the work that businesses and finance and others are doing.
They'll have to be on their toes. I have a lot of respect for the NGOs. I worked with almost all of the famous ones while I was at TNC, all led by really smart people who work very hard, who they're great organizations. I think it will be dynamic. So they'll need to do what I was preaching earlier. They'll need to pay attention to their critics, not be complacent, not always sure they're right. I suspect they'll figure out and do that. But there also should be room for new entrants too. It's a dynamic world, and there's so much to do. Some people used to say to me when I was at TNC, aren't there too many NGOs? And I said, oh my God, no. It's a big world. There's so much to do. There's room for new entrants.
Cool. There's 2 about communities. One that says, can the financial thinking you described be applied to the climate adaptation challenges communities face? And then a longer one about some communities and settlements most threatened by sea level rise and tropical cyclones are not likely to be seen as places to invest. I'm thinking of places like the Maldives, Kiribati, Rico, but even settlements in Louisiana, Alaska, and the Chesapeake, yet the communities living there need solutions. How does finance perspective address those communities?
Yeah. So I'm really, those are both good questions. The second one, I'm really glad it came up. One flaw or one danger of thinking about this return on investment approach to conservation or environmental progress is it doesn't always apply. There are important things for environmental organizations and governments to do that don't create high returns, but they reduce risk, or they protect nature, or they help vulnerable people, or they facilitate a just transition. So I'm really glad that question came up. It is not the case that everything can be done on this profit-oriented or generate a return basis. And indeed, it's a danger of talking about that because you might inadvertently give that impression. So at the Nature Conservancy, when I was there, we knew full well not everything worked this way. And I think that's really important. When we think about climate adaptation, it's not a happy topic. Even if we're very successful, there's going to be a lot of harm done by a changing climate, and there are people in harm's way. And green infrastructure will be required, both gray man-made infrastructure and green infrastructure. Some of that will work on the return on investment kind of schemes that I was talking about. Again, that example in Mexico I pointed to is one, but a lot of it will have to be done by government grants, by philanthropy. It's also important for me to emphasize philanthropy will always be the most important source of capital for nonprofits in general and environmental nonprofits. So I'm glad that topic came up. The book I wrote, Ricardo or Dove mentioned it, Nature's Fortune, it talks about green infrastructure. The world needs more green infrastructure. It can do what gray infrastructure does often better at lower cost and with good co-benefits. Sometimes it can be paid for with investor dollars. Sometimes it will need to be paid for by aid or government grants.
Great. So this is the last question I'll ask you, and I think it's a fitting last question. I'm curious what Mark and Ricardo see as some of the most exciting projects happening in the next 10 years.
Ricardo, you go first.
I don't know. I mean, I think that the more we go towards actually incorporating and internalizing the value of nature and of social issues into our economic system, the better off we'll be, because I feel like we're playing with a bit of a, loaded dice or a stacked deck, in the sense that the marker, the scoreboard we use to say, is something working? It is badly aligned. It is like we're operating with an operating system that is hundreds of years old, and the system is crashing. And that operating system is a system of finance that says capital and labor are what's scarce and are what's valuable, but natural resources and ecosystem services are not. And I think the more we go towards that, the better off we'll be. I'm particularly excited about the role that technology can play in this, and us understanding what these ecosystem services are and incorporating them into our thinking, because I don't think we're going to solve these problems until, right now, when you see a forest, it only has value in our economic system, or mostly has value in our economic system, when it's cut and turned into furniture or wood or what have you. And clearly that's not the answer, because when you cut it, you got to do the other side of the ledger. You got to say you're losing something when you do cut it. And what are you losing? And when we understand that, that'll be interesting. And maybe, blockchain and monitoring technologies and satellite technologies and all these cool things that are going on right now will help us better understand that, keep track of that, and incorporate it into our economic system. And if that happens, then I think we'll be in a much better place than we are today. So that would be my answer.
It's a good answer. I agree with you. The only thing I would add then is can we be optimistic that change in thinking and disclosure and allocation of capital is happening? And I think we can be. So I'll mention, this is what I write about in my newsletter in every issue, these kinds of themes. I'll mention two things I already mentioned. The effort by countries and companies as they pledge to achieve net zero. As they struggle with those pledges, that's going to drive the kind of stuff Ricardo was just talking about. The same thing is true with this 30 by 30 campaign under the auspices of the Convention on Biological Diversity. There's a big meeting in China this year that aims to be for biodiversity what the Paris climate meeting was for climate. But I think you're going to see companies, governments, NGOs all pushing in these two directions, and others, but just take these two: net zero, the need to save a third of the planet for biodiversity. And as that happens, these important things that Ricardo was talking about will surface and unlock progress.
Yeah, and I would just say that, this is really a dance between consumer behavior, policy, technology, and finance. And, we can't do just one. It's not about just one. I think Project Drawdown and Jonathan Foley said, addressing climate change is a chess game. We've got to use all the pieces. And we do have to use all the pieces. And we have to understand what is our opening move and our opening gambit. And I think we're at that point now where we got to decide what the opening gambit is. And I appreciate you taking the time, Mark. Thanks for sharing your experiences. Really, you've had an incredible career that straddles, two of what I think are the most important issues of our time: finance, environment, and how those two things relate. So really appreciate your time, and look forward to seeing you around more in these circles. So thanks, Mark.
Okay, thank you very much, Ricardo. And thanks everybody for checking in, and thanks to Brown for hosting this.
Bye, everyone.